Returned from Macomb, Illinois, where we had an exciting 1-point victory, 37-36, Western Illinois over Southern Illinois. And next week we play South Dakota down in Macomb. Just give me my little weekend. That's what I do, follow my son playing football. All right, we had a really hectic day on Friday with the bad jobs report and numbers. And it looks like the U.S. equities have actually rebounded. And I had said that on Friday morning, and if you follow us on Twitter all afternoon, I said vis-a-vis if there was no job report, I was bullish on the market. On Thursday, I said that it was a bullish close. And when we closed above that 1916.5 area and so on. So the job report, the overreaction to it, we rebounded. And the market is trading up in areas where it's going to become crucial to see if we're going to regain and break out of this negative pattern that we've been in for the last 2 months, going into the last quarter of the year. So this is going to be crucial. I've got some charts I need to show you. So let's get the screen share. Make sure if you have questions, to get your questions in on, you can Skype them in on Twitter, or I'm sorry, put them in on Twitter, but most likely just go on the live screen. I'm showing some toss charts today because my charts are still being rebuilt. Thanks to me, the way I don't know what I'm doing, I kind of screwed up all the things on my computer. So Anthony and Pat are fixing those things for me as we speak. But things are getting closer to launch, and I'm, I think that you guys are going to be appreciating everything we're doing, and you're going to make you a better trader, as we like to say here, trade smarter. All right, here we go. Let's take a look. Let's get to the screen share. All right, I'm going to start with these charts, and I've been showing you this chart for a while. And what I did was sort of readjust to this chart because we had a bottom back in October of 2014, but the real bottom was really February, which was around 1806. So I kind of redrew the Fibonacci charts to kind of reflect that. Okay, so here's the key point, right? The 50%. 50% of that move, and where we've been from the all-time high. There's the all-time high up here. Okay, from 2134, we're starting to trade above it. 1933 and a quarter. This area right here, right? And as you can see, even with the little blip on Friday, right? We had the wild opening, and then we closed higher on the day. We're getting above that 50% from the low in October of 2014 and the all-time high of this year, right? So the next key factor that and you can see we've been consolidating in this area, right? A lot of trading in this area, a lot of negative news, Fed not moving, Volkswagen, Greece, you name it. We've had bad news, bad jobs report, and we still have not taken out this low. This is telling me I think the market's being pretty resilient, and it's going to move higher. It's going to move higher going into the last quarter, okay? So the next key area above that, to really get out of this, we got to get above 1981, 1982, all right? And that's over a two-year basis, right? Then what I did is, let's assume that the low we made just recently, back here, this 1831 low is in, okay? And we know where the high is. So then I went and I did another fib, right? And here it is, 50%. This is 1982 area. So this is what you do when you're doing charts, right? You end up trying to get consensus. We're trying to get consensus, right? So when you look at the 50% of this move that we just made, from the high to the low, it's the 1982 area that we have to get out of to end up turning the market to the bullish. That would be a 50% move from the high to the low that we just made. So, we're getting in this area. We've put a lot of time in here. You think about, how many days this is. Over 3 weeks now we've been trading in this area. and the market has absorbed a lot of negative news, So, and as I like to say, United States equities and the dirty laundry of the world economies, we're the cleanest shirt as we speak right now. So you take a look at that, and that's what I'm looking at a long-term basis. All right, let's take a look at profile. Okay, now the key to me today is, can we trade back to 1947.75 down to 1942? If we can stay above this number right now, this market is bullish and going higher. Market's going bullish and going higher. So we could have a retracement back down to there. I had put in early this morning. I was up at 2 o'clock in the morning because I fell asleep at like 5 o'clock, and then I woke up and I had a target here of 1956.5, which we've already hit. My next target is 1961.5. Okay, 1965. All right, 1967. We got a naked VPOC, and then we got an unfinished top at 1969. That's what the targets look on the way up. So if I back this up, let me see if I can. All right. Whoops. All right. Sorry. Right here, here's that naked VPOC. Here's the unfinished top. Okay. All right. And then those are my other targets that I've looked at. Okay. 1956.5. This 1956.5, it looks to me that for sure, I think we're going to, test this 65 area. All right. Now, we have to be careful. The market has been going straight up since yesterday afternoon. So actually from Friday morning, it's gone straight up. So the key to my staying bullish, all right, is going to be this area right here we just talked about. Okay. All right. 47.75 down to 42. All right. This is the key right here. Can we trade back down to that area and stay above it? I'd be buying dips all day today. All right. That's on the profile. When I look at the value areas, these are really skewed. The value area high is at 1921.25. All right, we got the VPOC way down at 1889, and we got 1883.25 as the value area low. All right, so increased volatility. These are the things that make the world go around, right? As we are as traders. So you got caught short Friday morning, trying to take advantage of the break. All right, 1951. Let's call it 1951.75 is the 5-minute pivot sitting there. Okay, it's in a buy. We're already above R1. Okay, I'm sorry. R1 is right here. So 1963.5. How do we get to R1? Okay, that's calculated off the floor trader's pivot. It's been used forever and ever and ever, which is the high, low, close divided by 3. High, low, close divided by 3. All right. So that's R1. R2 is way up here at 1984. All right. That's what we've got as profiles concerned, and what we're looking at as S&Ps. Okay. Let's see. Right now, currently, if I bring down the NQ, currently it is in a sell. It just took out its 5-minute pivot. So getting a little bit of pullback from their highs. All right. I will post out what pivots those at, where it's resting on the top. Here's the Russell in a buy still. Its 5-minute pivot is at 11.1770. All right. And then we have the Dow sitting right here at 16.33. Let me pull these up. Sometimes they just don't look as big as they should. So here's the pivot sitting on the Dow. It's right here. So when I blew it up, we're at 16,408, 16,408. That's what the pivot at. We'll keep you informed on that throughout the day on Twitter. All right. And here's the other pivot for the Russell, sitting at 1117.80, 1117.80. We'll keep you informed on Twitter on those. So that's what I'm looking at for right now. I'm got to be bullish, and the key is those 50% retracements we've talked about. Let's look at gold. All right. Gold trading above value right now. Okay. It's got a point of control above it, 1138.60. We got the top of value 1134.70, and the bottom looks like I typed it in wrong. So let me give it to you there. The top of value is 1139.30. 1138.60 is the point of control. 1134.70 is the bottom of value. All right. Bonds, a little bit of a retracement after the news, rallied all the way up to 1160. All right, it's trading below value right now. We got the bottom of value 159.09, 159.22, and then 160.17 is the top of value. We traded all up to 160 on the news on Friday morning. All right, still don't think the Fed's going to move this year, so I think that the bonds will be up in the 160s by January. Would be by next month. Oil, getting a little bit of a rally today. Okay, trading up 46.5. I got 45.31 as the top of value, 44.29 the point of control, and 43.97. 43.97. All right, I still been calling for oil to go lower. I think there's going to be news out that will change the way we look at oil. Still a lot of production out there, and still global slowdown. We can't stop that. So remember on S&Ps, here's my key area right here. I'm going to expand this chart so I keep it as it goes throughout the day. Right here. All right. 47.5 down to 42. Got to stay above that. All right. Stay with us on Twitter. Any questions, Dan?
Yeah, they want you to go over what a naked V pockets.
Oh, okay. Naked V pocket. All right. All right. Well, you see, it's pretty simple. So a VPOC is volume point of control. So it's an old mode, right? So here's a mode that has no trading. It's had no trading. Let me move it back over here. So here's a mode that hasn't been covered up yet. So that means that the market has to, if it rallies up here, we'll cover this. And what is a volume point of control? It's exactly what I'm telling you. It's an area where there was a lot of volume. So from this point, 56F, right? This was a naked VPOC right there. Okay. I'm sorry, that this is the current VPOC for overnight trading. The naked V, that was one of our targets. Let me go back over here. And because this market moves over, naked VPOC right here, 1967. All right, if I go back this way, all right, here it is right here, 1967. Here's a VPOC put in on the date of 9/21, September 21. Here was most volume traded, and the market sold off from there. Okay, and there was no other. And we look at VPOCs modes because why? Because the market likes to go back to high volume areas, right? So that was a high volume area that did get covered up, right? So, and then as long as we're here, let's take a look at what an unfinished top is. All right. So I'm looking at this unfinished top from the 21st. Okay. This is not a normal tail, right? Just like this is not a normal tail. all right? It should be more proportional to the weight. You've got 1, 2, 3, 4, 5 letters. There's not, there should have been more letters. This is not a normal tail. It should be with distribution with 1D, then 2, then 3, then 4, and then it would look normal. So we call this an unfinished top or bottom when we get a tail on the top and bottom. So that's an unfinished tail. Let me see what. I don't know where all this stuff goes. Oh, there it goes. There it is. So let me bring this over here. We have to fix that, which we're working on now, so these things don't move. So this is what I was looking at 2 o'clock this morning when the market was basically trading right in this area. When it came in and I drew these up here, I figured I had 51 up there also. I figured for 51, if 51, we got above 51, that it would trade to 56.5. Thinking that, we got to be a little careful on the opening because we've come so far since Friday afternoon, and there may be some profit taking. Any other questions, Anthony?
Yeah, so what is your view on the inverse relationship between ZB and ES?
I don't know if it's so the inverse relationship. Well, look, I grew up in an era where bonds really mattered and there was a flight to quality, right? So flight to quality means you sell equities and you buy bonds, okay? At 0% interest rate, a flight to quality now is what bonds do you buy in a safe haven with your cash if you think there's, a global meltdown. You're buying, what's the difference if you're buying gold and bonds? So the inverse relationship, for me is that, we got equities going up, and I don't think that the bonds have much to do about equities anymore. All right. I know that we respond to these numbers, and everyone thinks that it's a quarter basis point is going to be disastrous for the stock market. But are you kidding me? We got a rate of return, right? You're looking for a rate of return. You got a bunch of baby boomers retiring with money that wants to take it out of the market, and they have nowhere to go unless they want to, when it comes to bonds, unless they want to start, buying AAA corporate bonds, some sort of debt. You have to find something that's going to produce yield, and treasuries aren't producing yield. So I don't really think, I think that the disconnect is not with the way they trade off of each other. I think that the disconnect is what is the expectations of the Fed, right? So the quarter point, I think there'll be a knee-jerk reaction. That's why, look, economically, I didn't think the Fed would ever move off the rates this year, and I've been saying it since January. I got videos time after time and time after time. The market just didn't support them moving off their policy. Now they're at a point where they have to show some sort of strength, and they've got to bite the bullet. They've got to raise the rates and get to a point so that if there is a disaster, they still have some bullets to play back and give the perception that, okay, we can loosen up the money supply again. So I just think that the inverse relationship, the bonds are trading more on expectations, and they have really little to do with the stock market. The people that are in the stock market are looking for yield and looking for a long-term play. Anything else?
Okay, now that the Fed isn't going to raise rates in December, what can be a reasonable target for the ES by the end of the year?
By the end of the year, it's going to be key, right? We're going to talk about, I talked about these. So, just think about where we came from on Friday, right? I mean, could the market get back to the all-time highs by Friday? By the end of the year? I mean, look over here. We're above this 1933. I think if we get above the 1980 area, okay, then then we're looking at 2000. What is this here? I can't. Let me open it up a little bigger. 20.5. All right, 20.5. Okay. This area right here is where we broke from, which is 2090, okay, 2100. I could see us going back there by the end of the year. Especially if we get above this. We get back above this. All right. That would be a 61.8% retracement. That was on the down. We got back above it. Now, depending, we're above here. So this number I said is 1980, right? And then I go back to this number. I don't know if I could find that. Two different time periods. Let me give me a second. All right. And then I look at this, 1980 again, right? So 1980, if we got above 1980, chartists like to see 50% retracements and getting above them. So once again, 1980, depending on what you're looking at, if we get above that, could we get back up to, 2018? Could we get back to this area here, which is 2070, 2100? I can see that by the end of the year. Any other questions?
That's it.
All right, everybody, let's get ready. Have a good day. Follow us on Twitter. I gotta get my charts straightened out this morning, but you know what? We're ready to go. We're ready to rock, and everybody have a good day trading. And remember that your goal is to take money out of the market every day. Take money out of the market every day. All right, everybody, thanks for tuning in. We'll talk to you tomorrow morning, and good luck. Follow us on Twitter, Man of the Market on Twitter.